What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on ZOM Stock. First of all, as usual, brief summary about this company. Zomedica Corporation operates as a veterinary health company, which engages in the discovery, development and commercialization of pharmaceuticals for the companion pet. It offers products for dogs and cats by focusing on the unmet needs of clinical veterinarians. Its TrueForma biosensor platform is designed to assist practitioners in the diagnosis of complex conditions. And on their website we have some updates. They launched their TrueForma and they updated this section of their website. And as you can see, here is this platform. It says TrueForma offers complete control over the testing process from start to finish, with highly sensitive and specific immunoassays that allow veterinarians to make clinical decisions faster and begin treating patients sooner. And as you can see, it is a very small system and it is very powerful. So at the end of the day, veterinarians have a more powerful and less expensive tool to make number of assays and to treat patients. And of course, since I made my previous video, more likely we had to see a surge in price, but unfortunately we have this decline, and as you can see, it was expected, and I didn't expect these dips. But nevertheless, I expect this pullback. But in my opinion, the main reason of this pullback is the early launch of TrueForma. On one hand, I mentioned in my previous video that Zomedica is extremely confident with their product, and I think they expected more interest in TrueForma. But unfortunately, from the investors' standpoint, they launch their product without much information around internet, around mass media, and that's why buy the rumors, sell the news. And when the news was published on March 17, I guess, or on March 16, we have this decline, and for now we have from the top 46%. But as for me and as for long-term holders, I think this decline gives more opportunities to buy these shares for the long term than to sell their entire portfolio. And let me show you this article. We are on Investor Place, and this article was published on March 31st. And it says Zomedica could tap into potential $5.38 billion vet diagnostics market. And let me quote you this paragraph. We already know millions of people treat their pets like their own flesh and blood. Folks are spending gobs of money on top-of-the-line toys, food, clothing, healthcare. In 2019, they spent nearly $500 million on Halloween costumes, if you can believe that. So it comes as no shock the veterinary diagnostics market could reach $5.38 billion by 2027, according to meticulous research. After all, for many of us, we hear one little yelp and we are bending down the vet's door for help. And I think $5 billion of total addressable market is a huge market for the company like Zomedica. And let me remind you that Zomedica is the only company that provides this type of assays for the low prices because of their disruptive product. And let me show you one more article, and we are also on Investor Place. It was published on April the 2nd, and it's titled Pounce on this pullback in the Zomedica share price. Time to lean bullish on ZOM Stock as Zomedica commercializes its pet diagnostic product. And let me show you this information. It is statistical data that was published on SEC 10K form made by Zomedica, and we have several bullets, and let me quote it for you. 67% of households, nearly 85 million homes in the United States, have at least one pet. The average lifespan for dogs has increased to 15.4 years, and companion animals are generally living longer. 93% of dog-owning households visit the veterinarian annually. It's estimated that US consumers were expected to have spent $99 billion on their pets in 2020. The companion animal diagnostics market is forecast to reach $2.8 billion by 2024 at a compounded annual growth rate of 9.8% from 2019 to 2024. In addition, the global veterinary immunodiagnostic market has been predicted to expand at a CAGR of 9.6% and reach $2.1 billion by the year of 2022. And as you can see, this information is only for United States, and this is the total addressable market worldwide, and on next year it will be more than $2 billion. And that's why I am extremely bullish on this stock for the long term. And basically I'm not so worried about recent sell-offs of this stock. And let me show you institutional investors. We are on fintel.io, and as you can see, since I made my previous video, we have one filing that was made on March 25th, and we have $186,000 in value, and position was opened by Schwab Total Stock Market Indexed Fund. It's not so big stake of the company because their total market cap is $1.38 billion for now. But nevertheless, we have more green lines that was made at the end of February until present day. And the red lines was made on mid-February, right around this sell-off. And I think it's not so indicative for the company because in the long run, this company, in my opinion, might be very successful. And before we dive deep into the technical analysis, please subscribe to my channel with notification bell. In this case, you won't miss my next video, and hit the like button. This helps me a lot. So as you can see, I drew this line. It is a strong support / resistance. And for now, we have the last candle that poked it through. But we saw these previous two candles that poked through back on 23rd of February and 5th of March, and then bounce back. And I think from this point we might have two possibilities. First one, that on Monday we will bounce back. It might be a trend reversal from this point, and as you can see, we still on our third accumulation point, and it is the point where you can add your position if you invest in this company and if you've already done your own due diligence. But on the other hand, we have some bearish signs. As you can see, these two last candles, they show us bearish sentiment because bulls try to push the price up, but bears regain the control, and we closed below even 55 exponential moving average. And the next candle also closed below 55 exponential moving average, and that's why this might be a signal for some short sellers to short this stock. But in my opinion, we still have one more level to add our position. According to Fibonacci retracement tool that I pulled from the bottom of the third wave to the top of the third wave, as you can see here, we have the most probable zone of trend reversal, and we still can touch this zone and then bounce back. And the reason why I didn't mention about this level in my previous video, because I saw this strong support at $1.5 price point. But for now, we have an opportunity to buy these shares even lower, and this give us more attractive average price to have some gains. And for now, according to our current data, and because of the lowest point of the retracement of $1.35, we still have these levels as our targets. And let me remind you that we have $3.5 mark as our primary target, about $4.1 mark for our secondary target, and 5.8 mark for our most aggressive target. And basically, I don't have more information to add to my technical analysis. Just subscribe to my channel, hit notification bell if you haven't done this before, and hit the like button. See you guys and girls next time. Bye!